Hello, good afternoon. Hey Minal, how you doing? Good morning, Janbi. Hi there. Give it a couple of minutes. Good morning, Carson. It's going to be a little bit of a odd session today because we do have the FOMC to be released later on tonight or early tomorrow morning. So uh, not all projections, or rather projections are going to be a bit all over the place. So we'll run through a couple of scenarios through today's session. Hi Mixon, how you doing? Hey Willie. Hi BL. See a couple of new names here. Either you've been watching and you finally decided to say hi, or you're new to the session. If you're new to the session, drop a message, say hi, let me know where you're joining us from. Love to find out. And also, the link is there. Do join us on the Discord channel. Hey Steve. Hey Corey, how you doing? Hey Pablo. A lot of new guys on TradingView as well. So link is there. Do make sure you click on the Discord link. Join us in the Discord channel as well. One more minute before we get started. Had a good quick trade on the Aussie dollar. Had a slightly longer than expected trade on the Euro dollar from yesterday. That's for me. How about you guys? What trades did you get into? Let me know. Anything that you made money on or lost money on, let me know. Alrighty, let's get started. So again, we're here with the daily market analysis, doing this every weekday, 3 p.m. GMT plus 8 for you guys, sharing with you my points of view of the markets, where I think prices could head towards, where I think what news could impact the markets, projections of that, looking for possible trade setups. Again, if you're new to the session, drop a message, say hi, let me know where you're joining us from. For all the regulars, thank you for making time and joining me on this session. Good to have you all here with me. At any point, if you do have questions, do put it into the chat. Let me know any particular pairs you'd like me to look at. Put it into the chat and let me know as well. All right. So with that quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. I'm sharing with you my points of view of what I think of the markets. Please do your own due diligence. DYODD. The contents of this webinar is not intended to be a recommendation to trade a financial product. Your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. Okay, so with that said, let's keep going. Hey PM, how you doing? Hey Spiros. Corey says Euro potential buy. We'll have a look at that as well. Okay. So what we had from last night, not a lot. It was a little bit of a surprising, a lot better than expected news on the consumer confidence for the US. It was a 109.7, got revised slightly to the upside to 110. Expected 112, got released at 117. So with that, we actually saw a brief strengthening of the dollar before it came back down again. But the main focus was the CPI data that we saw being released for the Aussie, right? So Aussie CPI quarter on quarter was 1.4, expected 1% was released at a 0.8. CPI year on year was 5.6, expected 5.4, got released at 5.4. Streamed mean CPI quarter on quarter 1.2, expected 1.1, came out at 0.9. So if you remember from yesterday's session, I was sharing with you guys, this was at 9:30 GMT plus 8, so I was sharing with you all about this yesterday. We were anticipating that a slowdown in inflation growth, potential slowdown in inflation growth, was likely to cause the Aussie dollar to drop to the downside, but also that because we had the FOMC meeting to be coming up later today at 2 a.m. GMT plus 8, I was expecting a drop in the Aussie and then possibly to consolidate, or a small drop, a brief drop, and then consolidate. So what actually happened there on the Aussie with the CPI number? This was at 9, right? We were looking at it to drop down to the support of 0.6724, 0.6725. What actually happened was last night it climbed up slightly on the news. It was at 9 a.m. It was at 0.6777. It dropped straight down. Take this away so we can see. Right, it dropped straight down to that 6728 level, bounced back up, pretty much consolidated or retraced and consolidated at the 6770 level. Okay, what I did here, just sharing with you a trade that I did, was I did get into the trade before the news. So at 9 a.m. got into the trade because I was looking at this coming down. And you saw the arrow. I was expecting the Aussie dollar to drop on release of the news. So it did drop, right? I did get in before the news at 9. I saw that come down on the close of the hour, got into the trade. Waited, took a bit of a risk, but waited for the release of the news. So just sharing with you, I did this. Okay. So my high was about that part. I had about 20 pips stop loss, right? So I knew that that was the high point. I just had it slightly above the high from yesterday. And then my take profit was down to this level, right? That 50 pips. My take profit was down to 50 pips. So I was looking at 20 pip stop loss, 50 pip take profit. Didn't go down to my take profit, but it did shoot down, came back up. I saw that was outside of the Bollinger. I closed out at about 30 pips. Just at about that point, right? As it was spiking down, I thought could hit my take profit. Didn't. Once it came back up, I saw it's outside of Bollinger, closed out the trade. It was a very quick 30 pip move, start of the day. I didn't want to go too crazy. A lot more trading to be done, so just wanted to secure the profits and then be done with that. So that was my trade from this morning, right? 6 hours ago right now. So that was done and dusted on the Aussie news. With that, what we have for the rest of the day, not a lot. Here we do have the Swiss, the Credit Suisse economic expectations, not likely to move prices too much. What I actually anticipate for now, all the way to 2 a.m., is a bit of a consolidation across the board. A little bit of a consolidation across the board. We might see some fluctuations in price, but I think that it's not going to develop a new direction for now, all the way until the release of the FOMC funds, or the federal funds rate, the FOMC statement, and also more importantly the press conference. Right? Why I say more importantly the press conference is because at 2 a.m. you'll see that the Fed funds rate, we're expecting it to go from a 5.25 to a 5.5, a 25 basis point rate hike to come from the Feds. Last month in June, they actually held rates at a 5.25. Right. So what I'm a little bit surprised that they're considering a 25 basis point rate hike after holding rates for 1 month. Okay, I'm a bit surprised that they're looking to increase rates by 25 basis points after holding it for 1 month. I was rereading into the statement. Right, I was rereading into the statement from last month where it was where was it? Inflation remains elevated, job gains extent remains highly attentive to inflation risk. Where was that line I was looking for? Holding the target range steady at this allows the committee to assess information and its implications for monetary policy, right? And then also to take into account the cumulative tightening of the monetary policy, the lags in which monetary policy affects the economic activity and inflation and developments. Okay, so that's the reason why they held rates, just to see the impact of the previous rate hikes, right? The possible lag in terms of the previous rate hikes, that's why they held rates. Right now, inflation in the US is at that 3%, if I'm not wrong. Find it. It's on the 10th. The next one is on the 10th of August. Bring that up. Bit of scrolling to get through. There we go. Okay, so on the 10th of August, we do have the US CPI data to be released again year on year. It was in July 12th, it went down from a 4% to a 3%. Okay, the risk or the reason why we're looking at another rate hike to come from the Feds, a 25 basis point rate hike, is that they were considering the risk of the data or the inflation data not sustaining, right? So they wanted to, most likely the scenario is we're looking at a 25 basis point rate hike just to push, right, or to continue that push of CPI towards that target level of its 2% or its 2% objective, right? So it's committed to returning inflation to 2%. 3% still not there yet. They want to get it down to 2%. That's why that rate hike. But what I think is likely to happen here is that we're going to see the US hike rates, or the Fed Reserve hike rates. But I think that the comments might be a little bit dovish, right? The statement might say that, hey, with hike rates, try and achieve the 2% target level. Inflation might be elevated, but anticipate that it's going to come down towards its target range. During the press conference at 2:30 a.m. GMT plus 8, what we're looking out for is hints that the FOMC is going to say that's it. At 5.5% is the target or the terminal rate for the Feds. No more further rate hikes unless absolutely necessary. Okay, so it's likely, not saying that's going to happen for sure, but it's likely we're going to see that rate hike, but a dovish statement or a dovish press conference to, stem or to reduce the sentiment that the Fed Reserve is going to continue hiking rates. Okay, so might hit 5.5% and that's it. If that does happen, then on the dollar index front, what we could see, it is at that 101.22 level, something very similar to this. Okay, so I'll take this away. Yesterday we were expecting it to bounce towards 101.65. It did not drop as much as we thought, but it did climb up and hit that 101.65 before turning back down. What I'm looking out for here on the dollar index this point, just extending this trend line, you can see that since the 18th of July, it started, bounced off once, 20th of July, and now looking like it's holding a bit at this 26th of July today. Fed decision could be mildly positive for the dollar, right? So what I think is possible here, going to sit there, maybe break down in the lead up to the Fed decision. A little bit easier to see. Okay, there we go. I think we could see this and take this away. Okay. 38.2. Nope, not gonna work. Okay, take this away. All right, so I think 23.6 still holds at this point. Now, with the with the Fibonacci retracement level coinciding with the trend line, this level might hold. I think with this view, I was initially thinking that we might see the dollar index break down, bounce up, and then turn back down again. Right? That was my initial thought. I think that with the confluence of levels at that trend line with that 23.6 level there, we might actually see the dollar index hold here for now and push to the upside on the release of the news 25 basis point rate hike. Okay, so that's the first move I would expect. Then during the press conference, if the Fed Reserve does come out sounding a bit dovish, talking about pausing on rates, typically they have not really mentioned too much about pausing of rates, but it's just whether there's hints of that. I think that we might even see this. Let me check something. One. Pick this up there. Okay, there we go. This might make a bit more sense now that because we have that 50% level here, holding prices so far, right? So what we could be looking out for tonight is that dollar index could push up. If it does break above 50, could hit 102, but I'm anticipating that it will fail to break above 102 before turning back down again, especially if the Fed does come out a little bit dovish. Makes sense so far? Put it into the chat. Let me know if it makes sense. Hi, Kosa from South Africa. And hi, Kelvin. How you doing? Hi, Ayakame. Hi, Buba. Put it into the chat. Let me know if it makes sense for you guys so far on about the Fed Reserve and the decision and the possible price movement. So I'm thinking that dollar index could spike up to 102, right? And retrace back to 101.25 if Fed's as dovish. So spike up to 102 on rate hike and retrace back to 101.25 and possibly even lower if the Fed does have a dovish sentiment. Thank you, Buba. No worries, Bell. It's there. Good to have you. You can always check back again later. Ayakami, Wabi, good morning. How are you doing? Hey, in your case. Corey, would it be a trade I would enter? Okay, so I wouldn't be trading on the dollar index, but we will have possibly some opportunities across the board. Okay, so overall, what I think this could happen, this is what I think could happen on the dollar index. Makes sense to your view? So now if we look at that onto the Kiwi dollar, right? So we're expecting dollar to strengthen before possibly retracing back down. So I will again give you the scenarios, right? So yesterday's trade came very close, didn't trigger, came very close for the second time, didn't trigger. We'll take that away. Hey Ryan, how you doing? From Ireland, good to have you with us. I've got a really good friend in Ireland as well, so good to have you guys there. Okay, what I anticipate here on the Kiwi dollar is possibly 23.6. Looks like it's going to be broken. 38.2 is a little bit too far away. So let's take that away. At this point, dollar, so we're looking at this as dollar strength to push up before coming back down. What we could be looking for here on the Kiwi dollar, very similar to yesterday's view, is for it to trade down, possibly come to the support level of 6150 before bouncing back up again, right? Dollar strength before that weakness coming back into play. So short at about breaking below, I think to be very safe, again, below 0.62, stop loss, tight, no more than 25 pips, take profit down to that 50 pips, to a 1:2 to the downside here on the Kiwi dollar. Okay, so I'm going to give you the initial move is, if we do see that dollar strength come back into play, then we're looking to sell. Same thing, 6.2, stop loss 25, take profit 50. This is on the initial move with the DXY strength. Right? And then onto the Aussie dollar, sitting right there. So Aussie dollar, I would like a lot more than the Kiwi dollar, and it looks like it might be the same move as well. We already saw the Aussie under some downward pressure. Right, Aussie dollar already on some downward pressure, bounced a little bit. Looks like if that dollar strength does come back into play, we could see it push down. I would be a little bit more aggressive. So yesterday we were looking at it breaking below 6.7. I think that if it does come down gradually, for today, if it does break below 6.725, we could be looking at 6.715. Stop loss 20. Take profit could go down to about 60 pips to the downside. Okay, so just a slight revision in terms of price there on the Aussie dollar. 6.715. Stop loss 20. Take profit 60. That's on the DXY strength again. Okay, there we go. Then on to the US yen. The US yen, we were looking at this to come down, bounce off this level before pushing up. That would be one view, right? So I'll still maintain that view. It is in that region where we were looking at, right? I do think that it's going to come back into this region and it's going to be a decider. It's going to be a decider on the US yen at this point. I'm going to give you an alternate scenario is that if we don't see the dollar strengthen, and in fact, if it does come out and maybe in the alternate scenario that the Fed does not hike rates, they keep it at that 5.25%, maybe one of the views here could be dollar weakness. We could be looking to sell this down. So below 140. Below 140, stop loss could be quite tight. About 30 pips at the very most. Take profit could be 90 pips or down to that 61.8 level, and that previous swing low is about 90 pips. Okay, so this is on the dollar weakness scenario. We could be looking at this. Obviously, if it does bounce up, there is a trade to the upside, but we might be On the dollar strength scenario, we might have other opportunities. Kiwi dollar, Aussie dollar. We're looking at this as a potential dollar weakness scenario. Okay. So 140 stop loss 30, take profit 90. So looking to sell on 140, stop loss 30, take profit 90. We're looking at this on the DXY weakness scenario. So why I do a lot of this scenario planning in the lead up to big news events is because if you guys are in my area in this time zone, you don't want to be up at 2:30 a.m. sitting there and you're only looking for dollar strength. Then in a dollar weakness scenario, you'd be like, oh wait, what do I do? I've just wasted my time watching the charts and not having a plan to enter. So in this case, in either scenario of the dollar strength or dollar weakness scenarios, we have potential trading opportunities to be, or trading setups to be had. Okay. Hey Jamil, how are you doing? Good to see you. So I'll be happy with that. Okay, I'll take 23.6 away because it's already broken that slightly. I'm looking for it to come down a little bit there just to highlight the area. Just to highlight this area, but I'm looking for it to break down of this point, then we could see it trade significantly lower. Next up, pound dollar. All right, again, guys, remember, if you find this useful, do help me out. Click that like, that thumbs up button on YouTube. Click that little rocket ship button on TradingView. Let's get more people onto the session. Somehow the algorithm works to get more people onto this session. So help me out there. On the pound dollar front, very similar to what we're looking at, right? So you've seen the pound dollar had that big, massive drop since it hit that high of, or since it came off that high at 1.31 on 18th of July, big drop to the downside. Would not want to be counter trend at this point. What we're still looking for is, okay, it's come quite close. I don't think we're going to see it bounce up. On the dollar strength scenario, we've seen it go up. I'll still be looking for it to reject off this level. Okay, so 1.2865 might be a little bit tight, but it'll be fine. 1.2865, 20 pip stop loss, even a 30 pip stop loss or 60 pip take profit. I wouldn't, I would love to target the next support level. In fact, what you could do is look to target the next support and then have a consideration at that point. Right? So you have a consideration at a 60 pip level, but you could be looking for a 100 pip take profit to the downside. Right? So this is that line there, just so that we see that. Okay, so on the pound dollar, pushed up, consolidating at that point. I'm looking for it to break down out of the consolidation. 1.2860. Let's be a bit safer. 1.2860. 30 pip stop loss. 100 pip take profit. Consideration at 60 pips as well. Okay. So 1.2860, 30 to 100. Pound dollar, we're looking to sell 1.2860. Stop loss 30. Take profit 100 will be, and that's on the DXY strength. Okay, what you want to also be looking out for here is possible hesitation at 1.27, 1.28 at the round number level. Okay. Make sense? Good. Remember, again, there is a news, so we always want to wait for the news. I wouldn't, for this case, how I entered it before the news on the Aussie, I wouldn't be looking to enter before the news on the Feds for this time, right? It's just going to be a little bit too. We're not definitely certain where it's going to be heading at this point, so I'll be a lot more cautious. Not trying to enter before the news in this scenario. I think it's going to sit there. It might spike down a little bit for pushing up, but I think it's generally going to be in this area for now. Okay, and then on to the euro. Angel case. Okay, onto the euro. This was a trade that we saw. We were watching even after the session. We got into that. I did get out at that point as it was outside of the Bollinger. I got out of that. Did not ride the whole thing. I think I got out about 25 pips, right, as it was just outside, close out the trade. Right now, so I do use the Bollinger quite a lot on when to get out of a trade. Right now on the euro, what's going to be interesting is the news about the euro. What was that headline I saw? There was something that I read that says that the euro was under pressure with inflationary concerns and activity in a slow session needs a new reform agenda. Here we go. Euro dollar slumps amid euro recessionary fears ahead of Fed and ECB decision. Okay, so looking at the downside on the euro, I'll be extra careful. Euro is typically something that most traders love trading, right? Everyone loves trading the euro, expecting that volatility. But remember here that after the FOMC meeting at 2 a.m. GMT plus 8, later on in the day tomorrow, we do have the ECB meeting, right? The ECB meeting, and they are also looking at a 25 basis point rate hike to take it from a 4 to a 4.25% on the interest rates. So because of that, I think that we could, in fact, see, I would reserve the euro. I would reserve the euro for a trade during the ECB, right? I think that we have a lot of opportunities on the Aussie, Kiwi, Yen, Pound. I think what could happen on the euro is that we might see it trade down with that dollar strength, but I would actually be more interested to look to buy this back up, right? Maybe look for that to push up, and then as the dollar potentially drops back down, we could be looking for the euro to bounce back up from there. Okay, so this might not be something you want to do during the news or just after the news. This will be a lot later. We could be looking to buy up 1.10, 100 and almost 120 pips to the upside. Stop loss even at 30 pips, so 1:4 to the upside for the euro dollar. Yeah, I think we can take it away. Bollinger, coming Bollingers are standard. You can just apply the standard Bollinger Bands. It's there already. Thank you, Corey. Good, and makes sense. Okay, euro dollar now pushing back up slightly. But I think that we might see it fluctuate there. I am looking for the trade down before pushing up. Ultimately, hands off on the euro for now. Can look at it later. Tomorrow, I will give you an update on the euro. Maybe even if it does push up, breaking above that resistance, we could be looking to buy it up further tomorrow. But that's a tomorrow thing. Let's just worry about today. Okay. So euro dollar, I would say 1.10 Stop loss 30, take profit 120 to the upside. Pro dollar 1.1, looking to buy 1.10. Stop loss 30, take profit 120. But this is going to be a later trade, not now. Okay, I'm trying to summarize it as much as I can. There we go. That's gonna be interesting. Let me just have a quick look again. Kiwi dollar sitting right there, waiting. Aussie dollar, yen showing some downside potential, coming into the zone. Pound dollar still consolidating. Euro dollar, as we just spoke about, fine. US Swiss franc, right? US Swiss franc, not a pair that I trade a lot. I was looking for it to bounce up as it was coming up to the up at about that 0.8697 level. I was on the stream yesterday after the session saying maybe it might break up, but it's not done that. So did not even trigger. Now that it's broken down, right? Now that it's broken down, partly because we are seeing some downside on the dollar index. I think that it is at a bit of an interim level here, right? At previous high, bit of the area there, and then it's sitting at that point. So far now we can say that that's a resistance level. Okay, so with this dollar strength is going to, if we do see a dollar strength, we're going to see it push up, which could see the US Swiss franc push to the upside. Okay, but based on the way it's moving, could find a bit of a base there before pushing up. Thank you, PM. I think what I don't like the US Swiss franc too much. What I think could happen might bounce up before turning back down. That's a, how big is that move? Let me see. A 70 pip move to the upside could be possible. All right, so let's consider this on the US Swiss franc. The Sweezy is that we could be looking to buy it up 8640. 8640. Stop loss 25 at the very most. Take profit 55 to the upside. I'm putting a bigger trigger level to the upside just because I think it's going to fluctuate along this point. I'm very undecided because it is right in the middle. Yeah, I'll tell you what. It is right in the middle. Let's keep to our plan. This would be something that you're not going to look at because I have big support level here at 8558. I have a big resistance at 8700. It's right in the middle. You could get into a trade, but your stop loss is not going to be very secure. What I mean by it's not going to be very secure is because if I did have this, what could happen is that it will go up, trigger your trade, come down, hit your stop, or possibly going back up again. Okay, because it's not protected by a support level or a resistance level. So I don't like that kind of right in the middle points. This will be something that you might scalp in the shorter term and not something that you would do on the longer, on H1 kind of time frame. All right, so I would say US Swiss franc possibly could ignore in as it is in the middle of support and resistance levels. Okay. Yep. So sometimes don't want to enter a trade there. You don't always need to find a trade setup. The US CAD came, bounced back up, shot up, came back down, now sitting in the same area. It's pretty much fluctuating between 1.3170 and 1.32. Trend line still holding. I am possibly thinking that the dollar strength is going to see the US CAD or the loonie push to the upside. Might struggle to break strongly above that resistance level. Okay, and beyond this resistance, time for pound yen today. I will have a look at pound yen there, Booba. Moment. Next resistance would be at about 1.33. Okay, what you could be looking for, right, in the scenario that we don't see the dollar weaken back. Okay, so we're looking at the dollar possibly pushing up and then turning back down. If it pushes up and further up and does not retrace, then you could be looking at 1.3240, about almost a 60 pip take profit, stop loss about 20 pips. Still a good risk to reward to the upside there for the US CAD. Okay, so 1.3240, above 1.3240, 20 pip stop loss, 60 pip take profit to the upside. 1.3240, 20 pip stop loss, 60 pip take profit, and that's on DXY strength with no retracement. Right, so looking for that continuous strength on the dollar index. Then next up, Uba was asking about the pound yen. Right, so pound yen, yesterday we were just talking about this possibly pushing up before turning back down. It did not push up. In fact, it just went straight down, bounced back up, we're coming back down again, now looking like a bounce back up. In that way, it is still in that range. Because it is in that range, this is the way for now. I think it's going to maintain on the dollar strength scenario, pound dollar to drop. We could see it trade lower, but the US yen will be pushing up. In terms of the pound yen, just looking at this, it's a mess in this area. Right, it's a mess in this whole area between 182.52 or 182.50 and 179 almost 179.50. A big range. It is a very big range, about 200, almost a 300 pip range. But you also notice that in this range there is a tighter range again. So I would say that I wouldn't like to see it break up. Right? If it does break to the upside, I think that we do have another level there. I would instead prefer to see if the pound yen gonna retrace, turn back down, and then break to the downside. Again, not super happy with this setup, but if I really had to, below 181, take profit 120, stop loss about 60 or 1:2, to the downside, or you could be looking at 180.80, so breaking below this point. All right, breaking below this point, in this level you can have a tight stop, maybe 30 to 40 pips. 30 to 40 pips, take profit about 100 pips down to this level near to the support. That'll be what I'll be looking for. If it does trade up further, then great. I'll look for a reaction at that resistance. But at this point, I'll be looking for this move. Okay, so just to clarify, at this point, I'll be looking for it to trade down, break to sell. If not, if it does come up, then I'll be looking for a reaction at that point, either a rejection or breakthrough. If it does break through, then the next big resistance is at 184. Right, then that would be relatively straightforward. About 182, 182.75. Got 100 pips to the upside. You have about a 40 pip stop loss up. Okay, trading cross pairs seems tricky to me when trying to relate each pair with dollar index. How do you handle this? Simple, right? During a news, especially during a big news event, I would focus not so much on the cross pairs. I'll focus on the dollar backed pairs or the dollar pairs, just so that I have less things to consider. I'll be looking at the dollar index, how it's moving, and then right across the board looking for what's reacting according to the way the dollar is moving. If you had to trade the cross pairs, then you really do need to understand or to have your charts, multiple charts open, looking at how the pound dollar is doing, looking at how the US yen is doing, then looking at the pound yen on whether it correlates or not. Okay, so keep it simple during the news event. I would usually just focus on the majors rather than the cross pairs. Hope I answered your question there, Buba, on the cross pairs and also on the pound yen. Then next up, we look at gold. All right, so gold, yesterday we were looking at this breaking out of that consolidation to the downside. I was saying that it goes below 1958, it could get down to 1948. So it did break out of 1958. It came down to 1951, not 1948, right? So it came down, but just shy of that support level. Take that away, with the way gold is moving right now, pushing back up, it's really because we are seeing that downward push on the dollar. I would still say that this is going to hold. Might break a little bit before coming back up. We'll see. I'll update you guys further on how the dollar is moving. But as the dollar drops, for now, we're seeing gold push up. I would like to see a bit of a recovery on gold. Overall, you see that gold is still maintaining that upward push, right? It's still maintaining that upward trend line. So I think that that's fair push, breaking above that near-term resistance at 1967. What I would be looking for here would be if it goes past 1973, we could see it trade back up to the 1986 level. So we're looking for that push back up towards that resistance. Okay. Romika, I can do pound kiwi. Just give me a moment. So above 1974, we could see 1986. Above 1974 could trade up to 1986. I'm quite interested in what's going to happen here. What I will do as well, and you guys know I've done this for the last couple of days. I will leave the stream running after the session, and then we'll update as we go, as the price develops for the next couple of hours. Okay, so it's almost like a trade together session. Have that. Then with the pound kiwi, do I have that? Nope. That. Pound kiwi. Looking at this in the range, big resistance at this point. So you see my approach is always the same, right? First things I do, always look for that support and resistance levels, just to look for the range. With the way the, what am I doing here? Okay. Up here, okay. So with the way the pound dollar is moving, pushing to the upside, because we are seeing that dollar drop for now, some strength on the pound, and the Kiwi dollar sitting right across. I think the pound Kiwi could push up because of that brief pound strength. However, it is right in the middle. It could come up to, I don't think it'll come up that much. I don't think it's going to have a good 140 pip move to the upside. I would be looking for a reaction at about that point. So if it does break above 2.0768, 2.0770, we could see it trade up, but I'll be looking for a possible, I think what we could see is I'll be looking for a reaction like that point there. Right, so possibly nothing to do for now. Let it trade up to that 2.082 level, then look for that potential downside. Looks like it's going to push up for the interim because of the pound dollar strength, because of that dollar weakness, slight dollar weakness. I think that we could see this go up and then turn back down, especially if the pound dollar does reverse from this point. All right. I think we're slightly aligned there, Stromika, so sounds good. Okay, so that completes the analysis there. What I will do now is I'll leave it running. I'll update, I'll see how price goes. We'll update it. I might be able to do another quick update for everyone on the Discord channel, so make sure you join the Discord channel. We do need price to develop price action to develop a little bit more before we get better, possibly a little bit better trade setups with the FOMC news release. Okay. Thank you, Carson. I really appreciate that. Happy trading. See you on Discord. Okay, so with that, do trade well, trade safe. If you have any questions, ask it on Discord, ask it on the chat during the stream. I will be monitoring that. I'll be updating you guys there as well. Take care now. Bye bye for now.